our mind frame is in the arena of thinking we're going to sell it, we're going to sell it, we're going to sell it, instead of thinking let me go and buy it, because that's what price is doing. Price is going higher. So we as traders, we don't think about what's really happening. Instead, we are thinking contrarian, or we get in at the worst possible time at the high. Okay? So what are you going to do? Well, will you buy the market if it's high? You may think it's too late, so you'll never buy it. So traders normally don't enter the market because as they see it going higher, they say to themselves, I'm not going to buy this market, it's already too high. I'm looking to sell it. So then the price moves higher yet, and we think, man, I should have entered that. Wow, look at that move. I should have entered that move, and you start kicking yourself as you see the market move higher, and your gut is telling you, I missed it, damn it. And now you decide to enter the market. And when you enter the market, guess what? You enter at the worst possible point. Most likely, and it happens to us all, we enter at the highest point of the day when the market now turns around and you have a losing trade because you entered not when the move first began, you entered at the complete high of the move, and now the market's starting to turn around, and you refuse to listen to what the price action, or I should say, you refuse to do what you saw, right? You saw the price go up, and you refuse to enter that right at the beginning of the move, okay? So it's important to understand how we think as traders, and if this is the typical trader, then you probably have encountered this scenario. Now, is the market telling you anything? Yes, it's telling you where it's going. We got to listen to it, watch it, and trade it. So where does this leave us as traders? Where does this leave us as traders? As traders, we wait too long to enter a trade. We miss trades, we get out too late, and we do all these things, much more, because we refuse to follow what the price is doing, okay? And if this sounds like you as a typical trader, waiting to enter, we enter wrong, we enter late, we miss trades that are good, we get out too late instead of getting out earlier when we had a chance to break even or make profit. This is the typical trader. And I only say this because this is how we all start our journey in trading. We don't really follow the price. Instead, we kind of wing it. And I'm trying to really get away from just winging it. I'm trying to have a blueprint to absolutely know whether or not what I'm doing is correct. And if so, I have a plan to follow through. Always let price show you, not an indicator. So I always let price, in essence, tell me, prove to me, describe to me what it's doing. And if it's actually going up or going down, that's what it's telling me. I don't have hope. I don't have to hold on to a trade thinking, please turn around or go in my direction. I have price that's demonstrating to me what's happening, and that's all that anyone should be following. So trust what the price is doing, not what you hope will happen. Okay? So today's trades, how we did in the market. Well, I'm going to show you what actually happened in the market today using the Alice line and a couple other things. But what I teach to traders goes beyond courses in a trading room, a chat room, or a follow me trading room. It's really an idea of being independent. So when you trade, you understand what's happening. You can make decisions on your own, and you'll be able to be consistent. I can tell you exactly when the market is reversing. I can, because I have a blueprint when I trade. The blueprint will tell me whether or not the market's about to turn around, and I follow it. So before I enter a trade, I want to make sure that I'm not entering at the absolute bottom or top of a move, where as long as my blueprint is telling me the market's about to turn around, I'm not about to enter the market in the wrong direction there. I want to actually wait for the market to prove itself, and then I jump in. Okay? Everything is exact with price entries, not ballpark figures. So I always have a reason and an exact entry price. I never think, well, I'm getting in around here and it looks good and hopefully it'll get to my price. It's not the way that we should be trading. I absolutely want to have a number, an exact number to enter the market, an exact entry price, and I want to have an exact entry signal. So either you enter knowing why and you exit knowing why. You should not be trading thinking and hoping that you will get your profit target and let's see what happens. It shouldn't be that way. It should actually be, let me enter knowing that there's enough room for me to take a profit, always, okay? So Atlas line today, August 18th, 2010, we have a reason to go long, we have a reason not to go short. Did you know why we entered long? So we always have a reason why we enter long. So if you look at the chart here with the Atlas line, you can see that price bounced off the Atlas line, and when it bounced off the Atlas line, did not go through it, we maintained a long position. Okay, so having in essence a blueprint telling you price is moving higher, price is above the Atlas line, price is not giving you any indication that it wants to go short, this is all a blueprint that we're using. So I don't see any reason whatsoever to go short. Instead, I only see a long, and only long trades should have been taken. The Atlas line is really telling me stay on the long side only. Okay? So what is the Atlas line? The Atlas line takes price and tells you if price is above or below the Atlas line, you should be long if it's above, you should be short if it's below. It's not an indicator that tells you go long because the indicator is telling you to go long. Instead, it works completely opposite. It's actually waiting for price to prove itself to go long or short, not the indicator to go long or short. So price needs to prove itself, not the Atlas line. How we trade it? Well, we have three significant entries to enter the market. We trade it as long as price is on one side or on the other side of the market. There are specific rules, and I do a one-on-one webinar with anyone who purchases the Atlas line to go over whatever markets you trade, making sure that you have it properly set up, and there are guidelines and a blueprint to using the Atlas line. Why it works is because we have only price action that we're dealing with. We have no parameters to optimize. We're not looking at a different set of settings for crude oil as we are a different settings for E-Mini. There's no optimization, so it's not like we're using a 9 period for something and a 28 period for something else. It's basically works on the underlying currency, commodity, or forex product, only the price. So it is truly a price action indicator. Filtering trades, let's stay on the right side. So if you're scalping the market and you want to only take a long scalp the entire day long, scalp long, take a look at this. You could have scalped long the entire day on pullbacks. Price was above the Atlas line, gave you all the entries that you needed to scalp the market. If you shorted the market on scalps, I don't think that that was the wise thing to do because price is not below the Atlas line. So if you took only long trades, 3 ticks, half a point, 1 point, each time the market pulled back a little, you got your money here. Trades every market. The Atlas line absolutely trades every market. Doesn't matter if it's E-Mini, crude, natural gas. It trades everything. Currencies, soybeans, DAX. So you really have a opportunity to use one price action indicator for all markets, and there are no indicators. It gives 3 orders: double bar entry, bounce trades, and a very technical trade crosses, which does not work on the crossing of the Atlas line but works instead as an angle. On Friday morning, I'll be having a live presentation. I usually have these 2-3 times a